Ridham Desai of Morgan Stanley has written a note regarding India's strategy, and he's talking about the new playbook or the new debates that have come into force. So one of the key things is that Ridham Desai of Morgan Stanley has been bullish on India for a while. He continues to write in his strategy note. In fact, his target price for Sensex at 55,000, even though it's just a 10% upside, is something which definitely is one of the most bullish as far as the street goes. Now, what they are saying is that in any market, whether it's a bull market or a bear market, worries keep coming, but the important thing is that markets need to to ascend that wall of worry, and that is what they believe is constantly happening as far as the markets go. India's relative case to other emerging markets, according to them, is very, very strong. They believe that there is an alpha opportunity in India. However, returns have been particularly quite strong from March 2020, and that's why absolute returns may ebb even from here on. That's what they are suggesting to their clients. Now, they have 3 or 4 key takeaways or key things why they are particularly bullish on India. They reiterate that. First thing is accelerating earnings, 2 straight quarters of earnings upgrade. They believe that acceleration in earnings would continue even from here on. Relative valuation of India as an emerging market versus some of the others still continues to be quite positive, and there is a trailing underperformance for India versus some of the other emerging markets, and all this makes them particularly quite bullish as far as Indian markets go. In terms of other policy actions that have happened during the time of COVID, they believe they are quite significant for various sectors. They are quite significant and material as far as the EPS growth is concerned, and that's why they would go ahead and believe that policy action will be the main key driving force which can separate India from other emerging markets. But they are also saying that this is a stock pickers market now. It's not an all-out market, but there are still ample of opportunities which are undervalued, ample of opportunities which are peaking the concentration, and that's why they believe that growth, where the growth surprise would actually come in, that is the space that one should essentially go and be with for 2021. Domestic cyclicals is definitely one of their favorite. It has been their favorite. Rate sensitives is what they particularly like, as well as the small and the mid cap space. They prefer the mid cap, the broader market versus the large cap market, and that has been one of their key debates. So now what they are talking is that a lot of investors are pointing out, asking for key debates, and that has been markets have risen too fast. Are interest rate changes suggesting an end to the bull run? Is liquidity going to be supportive or not for this sort of a run in the coming? Is the coming growth cycle already priced in? But they believe that this bull market has more legs to go. Maybe in the near term, there could be some rotation from cyclicals, from small caps, from sensitives to some of the other names. But they are, pointing out that this will be a stock pickers market. There are a lot of opportunities. A lot of stocks and sectors are trading well below their valuation versus the growth estimates that have been there. And that is the space to be in. They have been bullish on the mid cap space for a while, mid and the small cap space, and they continue to maintain that that will do well.